Good morning, good morning. How you guys doing? Nice to have you with me this morning. Thought it'd be a good idea for us to both look at the retail sentiment. Some of you are interested in looking at gold, euro, US dollar, US Japanese yen. So what better way than to get a snapshot of what the retail traders are doing, and then we'll compare it with the supply and demand dynamics on the charts and see how they compare. All right. Oh, got something in my eye. Anyways. All right, so that's what we'll do. We'll take a look and see what we can find here. First things first, we're looking at gold. And we see gold was just briefly pushing up higher not too long ago. If we look at retail sentiment, we can see that 77% of retail are short right now. It's not a massive amount. In fact, if we click into it and we look at the numbers, right, 77%, 7,900 lots, not a lot. In fact, if you scroll down and you click on daily, we can go back and we can see what those amounts were when we saw reversals form, okay? Here we go. Okay, let's look back and take a look here. Okay. 1 second here. Yeah. Okay. So we can see 20,000 and then a drop took place. Okay. Here we reached, let's see, 11,000. Price went higher. 9,000, price dropped. And over here, 10,000, price dropped. So basically, we're not even close to any numbers that we'd like to see for a drop. We're still in the 6,000, 7,000 range, okay? So we'd like to see price or retail traders get into the between 10 and 15,000 at least before we see some kind of a reversal, okay? And again, going back to what we've talked about with respect to the positions of the institutions, they're reaching max size. So as I was mentioning, there's upside potential, but very limited, okay? So I'm going to keep my eyes on the sentiment for gold because, you know, it's getting up there, not quite there yet, but that might be a really good timing mechanism for this reversal, because when we look at the CFTC data, it shows that there's room for them to add, but we don't know exactly how much they're going to add. We have an idea of how far price can go, but we don't know exactly what the banks are going to do before they do it, obviously. So one of the ways that we could use to time a drop in gold would definitely be watching retail sentiment and when it reaches a near max for short positions. Okay, so keep your eye on that. I think that will play a significant role. Euro US dollar, we're at 16,000 lots right now. Okay, 79% short. Though 79 is not incredibly large, but it's okay. Let's see right here before drop, where was short positions? 72,000. Okay, a big drop happened back here. 78,000. That's big numbers, okay? And so, you know, being 15,000 and above is really nothing, even though it's at 79%. You know, you would think, oh, 79% out of 21%, that's a big number. Not really when you look at the volume, okay? So in terms of retail sentiment, there's nothing really aggressive at this point. So I'm just looking at the charts at this point for the euro US dollar. I'm looking at charts. I'm looking at CFTC data. We had, what was it? The inflation numbers come out. I told you a short-term move to the upside with the dollar. Yeah, it was inflation numbers, or no, sorry, it was the rate. It was the rate. And price was contacting demand here on the 4-hour chart. We got that move. First, we got a little dip to the downside. Then we got that move to the upside. Then it came back down. It's basically just not going anywhere. It's sitting where it was, okay? Euro, US dollar, pretty much the same thing. We got a drop and then a rally and a drop, and you know, it's not really doing much. It's still at supply. There's a lot of stalling going on right now, and I suspect it's because we have institutional supply that is in play. So it's not going to just rally up aggressively. So, you know, I'm watching this one. I think longer term, you know, there's evidence suggesting that price is going to go higher longer term, but you know, it needs to break through this area of supply first. If it gets to that supply, holy moly, I'll be looking for long trades, and I think this one could really aggressively move to the upside. US dollar Japanese yen. So when we look at the CFTC data, one thing that we can see with the US dollar Japanese yen is that the banks went from super aggressively long, profit taking on those long positions, and now they're starting to get into short positions, okay? So we had a trade signal for a long position right here, and that has been working out quite nicely. But this was the short-term momentum to the upside that I was suggesting was going to happen this week. If you watched last week's or last weekend's CFTC video that I did, on the top of the video, when I introduce each major currency, I put a bias or a sentiment. And just to clarify what those are, the sentiment is what the banks are based on their positioning. If they're super long, then you know there might be a bullish sentiment. If they're super short, might be a bearish sentiment. The bias is what we are towards that that asset. Do we have a bullish bias, bearish bias? And so I'll put short-term, long-term, medium-term so that you have a better understanding of what we're looking at. Short-term is many days, could be many weeks. Medium-term is many weeks, could be many months. Long-term is many months, could be many years, okay? So I said short-term momentum to the upside with the US dollar Japanese yen, and that's what we're getting for this week. But longer term, we do see more downside. The thing here is we have institutional demand that's coming into play here. You see this? This is why we're getting this pressure to the upside. But if this gets taken out, move to the downside is definitely expected, okay? So now let's look at the US dollar Japanese yen retail sentiment. 56% short. Okay, so there's nothing really strong here. And I'm not surprised, to be honest with you. I'm not really surprised that there's nothing big here. We just finished coming from a huge fall. All right, massive drop. And so there's not much to see. We can click on the daily chart and have a broader perspective. Let's look back. Remember when price dropped? That was July 24, okay? And July 24 is, let's see the date, July 24, where are you? July 24, right there. So longs were at a peak here, okay? Look at that time back in, what was that? March 11. Wow, what a spike that was. But it looks like, give or take around this area, we're looking at longs were 3,000 and change. Okay, not much. Right now they're at 2,000. I don't see anything really aggressive here. Overall retail sentiment, you know, I was showing you guys something, and I posted on Twitter, and I posted in the Telegram channel, that the way I look at things, a lot of people still get this confused, so I'm going to break it down to you one more time. The way I look at this information here is community trend shorts versus longs, okay? So shorts is on the left-hand side that goes to the right, and longs are on the right-hand side that goes to the left. So I want to be short when retail traders have maxed out on their shorts and they can't go short anymore. Okay. And that's usually when the shorts come into this area here. Okay. Meaning that this red needs to come into this area. Okay, this red needs to come into this area. See how it's starting to come into on the pound US dollar? Okay, here it hasn't gone there yet. It needs to continue. All right, here's not even close. It's more longs. And so the same thing goes for longs. I'm looking for it to enter into this portion here at the end. US Swiss has pretty much gone into there, right? If you look at the US Swiss numbers, it's pretty much gone in. Okay, that's the first indication that I could be interested in getting into a long position. Now, it's not the only indication, but it's a good step in the right direction. Okay, it's the first step in the right direction. So if I see that retail traders have entered into a massive long, that means they've been entering as price is going against them. So let's look at US Swiss, right? Let's look at US Swiss. And let's look at, let's take a broader look here. So retail are pretty aggressive with their positions. Let's look at their the actual positions here. They're 85% long. Positions 2,900. Okay, not incredibly large, but let's take a look back. Okay, you see here where price did eventually go higher. What were their positions? 4,500. So 4,500 is near maximum size. We're at 2,900. So even though, you know, longs are 85%, 2,900 is not that aggressive. We would like to see more into the late 3,000s, early 4,000s, and then it would look better for a position. So, so I wouldn't really be basing a trade off of that, okay? But that's how I'm looking at the sentiment. That's the first indication. I look to see if it's near max. I look at positions, and then I do the supply and demand analysis. And if it's all lining up, then it's a perfect time to take a trade, okay? So we looked at gold, we looked at the euro, which is what you want to look at, and we looked at US dollar, Japanese yen. Okay, I think that's it. We covered all the angles. All right. All right, guys, that's it. Hope you enjoyed it. I'm going to be doing a level 3 class in about a half an hour. We're going to be talking a lot about looking for a trade signal, the system that we could take, or that we should be taking in order to locate a trade signal. And yeah, it'll be a fun discussion. So that's it for now. I'll leave you guys to it, and hope you guys have a good weekend. We'll talk to you soon. Okay, take care.